Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest. I'm on the road right now, but we're on the line right now with Danielle Dimartinobooth. She's a global thought leader on monetary policy and economics, and she's the author of Fed Up, an insider's take on why the Federal Reserve is bad for America. Her website is Dimartinobooth.com. And Danielle, thanks for coming on Crush the Street with me today.
Happy to be here.
You founded Money Strong, in 2015, and you spent 9 years at the Dallas Federal Reserve. So based on your qualified history, very qualified history, I would say, I'd love for you to give us your general sentiment towards the Fed and their role in the 21st century.
Well, I think the Fed has taken on a larger-than-life role in the world that we live in today. That's the reason I wrote the book, because I don't think that the average household, much less even investor, appreciates how big of a role the central bank has taken on. That means the last time in world history that we had an episode that paralleled where we were today preceded World War I. And that is when central bankers assume more power than any politician. And that is really kind of what gives me pause today, is that the central bank has assumed much too much power over households with quantitative easing, with their conventional monetary policies, their unconventional monetary policies. And again, we're talking about unelected officials who are supposed to be apolitical, and they're anything but at this point.
Yeah, certainly. And there's a lot of talk right now about the 10-year Treasury hitting 3%. This has been attributed to strong economics, depending on who you ask. However, many are concerned about the debt. What is your insider's take on the macro scene, the 10-year Treasury yield hitting 3% and the implications of this?
It's kind of ridiculous that we're talking about a 10-year yield at 3% being something monumental. And it really is reflective of the fact that Fed policies run so far astray that they haven't been able to normalize policy. This has been the slowest rate hiking campaign in the history. And even though it could be, by the time Jay Powell finishes, the most dramatic of them in terms of starting point, which was obviously zero, and where we're potentially headed. But you bring up the idea of, you bring up the issue of debt, and as ridiculous as it is to discuss a 10-year at 3%, by the same token, the costs of the United States are going to get very difficult to handle very quickly if we see interest rates continue to tick up. And that's what happens when you leave rates too low for too long, is Uncle Sam, corporations, households, everybody gets used to borrowing way more than they can afford to pay for, because the cost to service the debt is so very inexpensive.
Sure. Well, stocks are on the rebound, and I assume that's what you're alluding to in terms of what has benefited from these all-time low interest rates. And we've seen a lot of strength in the stock market, to say the least. We've seen maybe some of it attributed to deregulation, some of it maybe to tax cuts, which are going to the bottom line for companies, which is good. But overall then, what is your take on, current stock valuations in this new normal world of ultra low interest rates and, quantitative easing?
Well, I look to Warren Buffett's favorite metric, and that is to compare the stock market capitalization to the size of the U.S. economy. And when you look at it through that prism, stocks today are more overvalued than they were in the year 2000. And that, to me, it's a very easy question to answer, because that tells us everything we need to know. Valuations are as stretched as they've ever been, and that's the bond market is in an even more insane situation when it comes to typical valuation metrics.
Peter Schiff has called what we've seen in the dollar here a short cat bounce, short term. And my question is to you, with this short-term move we've seen in the dollar, some strength that has entered into it, Is this a short-term move in your opinion, or what is your general sentiment towards the US dollar long-term, with the Federal Reserve's role in monetary policy, but also as it pertains to, every other fiat currency in the world?
Well, with reference to Peter, and I know Peter. I've just come back from being in Brussels, and part of the problem with the dollar strength, if that's problematic given our debt levels, is the fact that so few other candidates out there as zero exist to displace the dollar. If you look at what's happening in Italy with their political unrest, there's a growing call for Mario Draghi to not end the tapering of his balance sheet debt levels. In Japan, the Bank of Japan owns almost 100% of Japanese GDP. There are no other alternatives. And so, as my boss, when I was at the Fed, Richard Fisher, used to say, the US dollar is simply the most attractive horse in the glue factory. It's not so much that the horse is not going to fly, that we remain the only viable option. There aren't any other currencies out there, and we've certainly seen that cryptocurrency is not going to be the route that's taken for a store of value.
So, in your opinion, is there a need for a central bank, period, to control money? Or if there was no central bank, what would society look like?
I think society would look fairly Chinese if we didn't have a central bank at all. We have to bear in mind that the financial institutions are in China today, and if we didn't, I dream of a central bank, that being what it was intended to be, independent, apolitical. It didn't have a strong, independent, apolitical central bank, and for all the people who say that we should end the Fed, I'm afraid it would very quickly become a matter of national security, and that our national security itself would be placed at risk, because again, if you want to disrupt somebody's society, you do it through their financial system. So I think it's highly irresponsible to say we should end the Fed. I think what we should do is revolutionize the Fed, upend the Fed, and make it be an institution that truly caters to its constituents, which would be all Americans, not just those on Wall Street who have benefited in recent years from the low interest rate policy.
Now, is it possible for the society, let's say the U.S., for instance, to go back to when, banks issued gold certificates? The bank, people stored their gold at the bank, and the bank issued
these are lovely things to ponder. They're all theoretical, and I get where you're going with this. I'm not a gold bug. What I will say again is that if we reintroduce true discipline to monetary policy making, we don't have to talk about something as impractical as going back on the gold standard. It's simply not feasible given how very complicated the global financial system has become. We are connected to the rest of the world by virtue of the fact that the dollar has been so strong. We've got emerging markets, for example, with $22 trillion in dollar-denominated debt. If we were to try and become an isolated, insulated society for the sake of going back on the gold standard, all kinds of calamities would occur, including the potential for world war. It's just not a feasible option, as attractive as it seems. People who want to go back to the gold standard are making a very direct statement. They want discipline. That's what they want. They want discipline of central bankers, and they want discipline of politicians to quit spending money like it's free.
So what does revolutionizing the Fed mean then?
Well, I think for starters that we have identified over the years many areas of, and I do not use this word lightly, corruption at the Fed. I think that the New York Fed has assumed a much too powerful position. The board in Washington, D.C. has also assumed a much too important position. You're on the West Coast. You know exactly where the largest source of economic growth is in this country. That's the state of California. It is the largest economy by far in the United States. Texas is the second largest, followed third by New York. The lines of the Federal Reserve districts need to be redrawn. all presidents need to have permanent votes on the Federal Open Market Committee, which will begin to distill away the politicking at the Fed, which exists in Washington, D.C., away from these power centers and begin to give the power back to people. The Fed's dual mandate needs to be cut in half. Job creation needs to be left in the hands of the private sector and taken away from the Fed, in my personal opinion. And we need to have one and only one banking regulator in this country so that the right hand always knows what the left hand is doing. Will save taxpayers billions and billions of dollars and streamline the organization down to what it needs to be, which is a much, much smaller institution.
Wow. Well said. Danielle, first of all, thanks for coming on Crush the Street. If people want to learn more about what you're doing, the services you offer, and where they can get your books, please let them know where they can go, and please share some closing thoughts on this interview.
If you want to find me, you can just put my last names all together, Dimartinobooth. That's my Twitter handle, Dimartinobooth. That's my website, Dimartinobooth.com. My closing thoughts are that we are at a crossroads, not just here in the United States, but globally. If central bankers are going to be willing to truly cut back, to truly implement quantitative tightening, to begin to shrink their balance sheets and have central bankers be less intrusive in our financial markets, then I would say that there is a glimmer of hope out there, because it is not inside of our financial markets and impeding the price discovery function. That is not where central banks belong. Jay Powell is a pragmatist. Maybe we get somebody with a little bit more discipline running the European Central Bank next year. Kuroda's policies have clearly failed in Japan. Maybe it is time for a true regime shift at global central banks to a step back to being people who preserve the buying power of our currencies and act as lender of last resort.
Danielle Dimartinobooth. Danielle, we'll have the links in the description area. Thank you so much for coming on with me here at crushthestreet.com.
Thank you.